Happy Friday and welcome to 5 Minute Friday with Foundations Divorce Solutions. Each week, we'll do a quick dive into a topic regarding divorce, mediation, finance, or mental health. So for today, let's discuss the 3 most overlooked financial issues in divorce. First, the hidden costs involved in dividing marital assets. Where do we start on this topic? There's so many areas of finance that we take for granted in our day-to-day. Sometimes splitting assets is easy, but most of the times, even to a seasoned CFO of the house's trained eyes, there are things they may not have ever taken into consideration. Each family will have their own set of details to review. No family's finances and assets or even debts are ever the same. Whether you have your own home with equity or it's underwater, income property, you own your businesses or have restricted stock units or RSUs, there are costs up front and costs down the line. For example, if you stay in a home for a few years while the children are in school, but plan on selling the house and moving elsewhere once the kids are grown, there is a hidden cost to sell a home. There are possibly capital gains taxes to also take into consideration. Capital gains on a primary home is up to $500,000 for a married couple or $250,000 for the individual. If you have more than $250,000 in gains as an individual, you now have to pay on anything in excess of that amount, which leads us to the next topic of taxes. There's so many different taxes to think about. Yes, capital gains taxes on the house is just one type of tax to take into consideration. When you regard how to divide up retirement accounts, such as a 401k to a traditional IRA to a Roth IRA, with or without a qualified domestic relations order or what's known as a quadro, there are different tax consequences to take into consideration. I use the example of one client we had in our wealth management practice. She came to our practice post-divorce and she did not have enough cash flow for her monthly expenses, so she kept taking funds out of her traditional IRA. Because she was in her 40s, she was getting double taxed for the funds she was withdrawing. Double taxed as in income tax for the amount that she took out, but also because she was under 59 and a half, early withdrawal penalty. On a positive note, you may now qualify to file as head of household and get additional tax deduction benefits as more than a single filer does. Lastly, the reality is that it costs more to be single than married. Even if you were in a 2-income family, your expenses were to cover one household. As divorcing people, you will now have to support 2 households instead of 1. All the shared subscription accounts, the multi-policy insurance packages, to the shared cell phone plan will now have to be split, as well as now the home with its own rent and mortgage payments. So needless to say, as you start your divorce or separation process, review your budget with a fine-tooth comb. Understand that the lifestyle you once enjoyed may need to be adjusted. And lastly, remember that once it's all said and done, the paperwork is signed and it's filed with the courts, you can't go back and fix it. You and your ex have entered into a contract which is now binding by a court of law. So before you sign anything to file with the courts, review your finances with a financial planner or a financial mediator to ensure that every aspect has been reviewed and considered. If you are considering separation or divorce or have any questions on what we talked about today, please reach out to us at Foundations Divorce Solutions and schedule a free consultation. We would love to connect with you. Our link and contact info are in the bio. Even if you're not in the state of Washington or in the Seattle area, please contact us. We work with colleagues across the US who may be able to help you. And also, please share this post or tag someone if this speaks to you personally or if it may benefit someone else. And lastly, if there is a topic you would like to discuss on a future episode, please DM us. Thank you.